I want to bring in Ines Ferre now for a look at some big movers today. And Ines, I know Quantumscape catching all of our eyes today, a top trending ticker on YahooFinance.com. The EV battery company up double digits today. What's behind that?
Yeah, that's right. Well, today, Quantumscape had an event where it basically talked about the performance of its batteries, its solid state battery, which can be charged within 15 minutes time, and 80% charge in 15 minutes. And just let's take a look at Quantumscape on our interactive Wi-Fi board. We've got an intraday chart here, up 14%. This is a company that went public via a reverse merger with a SPAC in late November, the day right after Thanksgiving. And it's a company that's backed by Bill Gates. Volkswagen also has a deal with this company. So it's very closely watched. And if we just take a look at a 5-day chart, it's up 42%, Alexis.
All right. Also, we see investors piling into Fastly. And I guess there are reports out there that CISCO may buy the company. What do you know?
Yeah, that's right. And this is the report that's really sending this stock higher right now. It's up 14%. The cloud computing company just soaring after a report from Street Account that CISCO may be considering buying the company. Right now, it's more on the rumor side than the actual side, but still there is this report that's out, and this is what's really sending the stock higher. You'll recall that earlier this year, the stock really has soared this year, but it has come down a bit from its highs after it was revealed that TikTok was its largest customer, its biggest customer. Also, the company giving a forecast of some slowing growth in its last quarterly results. But if you just take a look at a year-to-date chart, it's up 388%. Certainly, today's bump is really giving a boost to the stock that for a while was just kind of trading a little bit sideways because of this news that TikTok was its largest customer, and just so questions about slowing revenue growth in the future.
All right. We've also got DoorDash set to cash in on the frenzy in the initial public offering market. So the food delivery company is expected to price its shares today ahead of going public tomorrow. And I guess it looks like they're going to be pricing toward the top end of that price range.
Exactly. That price range being between $90 and $95 a share. That was up from $75 to $80. And it will be pricing today. It will start trading tomorrow on the New York Stock Exchange. And the company is hoping to raise more than $3 billion. I do want to mention the type of hybrid auction system now that is being used for the IPO, which DoorDash will be using and Airbnb will also be using on Thursday. And this is really to address a concern from venture capitalists that during IPOs that the underwriters sort of put a price that's lower, a bit lower, and there's money that's left on the table. So this will sort of address some of those concerns. So institutional investors will need to submit through an electronic portal how many shares they want to buy and also how much they're willing to pay for those shares in order to prevent that first day pop that we see a lot in those IPOs. But we'll have to see what happens. Unity used this type of hybrid auction system as well for its IPO.
All right, something to look out for sure tomorrow. And before we let you go, Stitch Fix, boy, oh boy, up more than 40%. I know this stock had a tough time of it early on in the pandemic, but it has really shot back.
Completely. Its revenues topped estimates. First quarter earnings came in at 9 cents. Active clients really came in at a better than expected. Those first quarter earnings at 9 cents per share. And also the other thing is that announcement of that new CFO, Dan Jetta, who's comes from Amazon. So as you said, the stock really flying high on the heels of that announcement, on the heels of that better than expected quarterly results. And year to date, the stock now up 97%. Of course, this includes this bump from today, up 40% today. Alexis?
All right, Ines, thanks so much.